My name is Michelle Burnt, VP of Sales with OneShare Health, and I have a partner in crime with me today, Mr. Ron Harrison. Ron and I have both been with OneShare Health since it opened 5 years ago. So it's been a ride. It's been awesome to see this go from a startup company to major success nationwide. And we have our agents to thank for that. So we have a new relationship with AHCP. So excited to be engaging with you guys. And today we're going to walk through our programs in detail, but also why should you join our team and why is this a good, viable, affordable option for every prospect you speak with? Couple housekeeping things real quick. We are going to record this session. Please don't feel like you have to write everything down. And I will send a copy of this to your management team afterwards so that you can get that. The recording, I believe, is automatically sent to you via email from GoToWebinar about 1 or 2 hours after we are concluded. Lastly, love answering questions. The last time we did this, the agents had amazing questions, but I do try to save those for the end just so I make sure I get through everything. You will notice in your toolbar there's a question section. If you're like me and don't want to forget, as we go through each slide, just type them in. And with that, let's get started. I'm sharing my screen. Hopefully you can see that. So I always like to start with, what are people seeing in the industry and why are we talking today? Well, I think we all can agree, quite frequently, if not daily, we hear that there's rising insurance premiums. In fact, later I'll tell you about my family. This is exactly why we came to OneShare Health. Increasing deductibles and out-of-pocket costs, and just overall limited healthcare choices outside of OEP. You've got your employer group, which tends to be too expensive. You got your short term, which, as you know, is temporary. And then you got fixed indemnity, which is definitely not as comprehensive as ours. I always tell agents, if you take away one golden nugget from this training, look at this bottom part here. For those who do not qualify for a healthcare subsidy, and there's still a lot of them, OneShare programs are up to 50% less than traditional health insurance. This means outside of OEP, you still got another 10.5 months of the year, and typically up to 85% here and there fluctuates of consumers don't qualify for Obamacare. This is where we become one of the most comprehensive and permanent solutions available. So I am a family of 4 in Texas, husband and 2 kids, in my 40s. And I say that because we're state-based and age-banded. And almost 4 years ago, we were on Blue Cross Blue Shield paying $1,350 a month. Never really used it, knock on wood, pretty healthy family. But then we got a letter, our premiums were going up again. Well, I had started working at OneShare Health, so I really did my due diligence, dug in deep. And I'm like, gosh, it's almost too good to be true. Like, this is super comprehensive and very affordable. We now pay as a family of 4 $600 a month with the same comprehensive services available. So when you see all over our marketing stuff, 50% less, it really is true. Okay, this is one of my favorite slides. And again, you'll have a copy of this. Sometimes I see agents use this with members because when members hear a healthcare sharing ministry, their mind kind of wanders a little bit. They're like, what is that? I bet it's very different. When in reality, although we're not insurance, there's a lot of similarities in the way we function and how we process medical bills. So first of all, instead of paying a monthly premium, the member pays a monthly contribution amount. We just use different terminology, okay? A portion of that is going to go into a shared account. There's only one huge shared account. So the more members we have, the more funds in the account. The more funds in the account, the more medical bills we're paying nationwide. Now, when I want to go to the doctor, I can select any doctor or facility nationwide. I'm not restricted. I show them my ID card just like you would, and on that are all the applicable visit fees. For example, it says PCP, $40, urgent care and specialist, $75, ER, $500. Then the member sees the doctor and they go home. It is that easy of a process. Behind the scenes is 4, 5, and 6. So we receive the medical bill. Of course, we're going to determine eligibility based off our membership guidelines. We're going to negotiate price, and then the sharing request is fulfilled, and the EOS, just like an EOB, is sent both to the member and the provider. Two quick things I want to point out on this page, and actually I don't have our June numbers yet. A little birdie told me we just hit 200 million, so exciting. So 200 million paid in medical bills, and to me that means way more than the amount of members we have, which is thousands and thousands nationwide, right? You can have 50,000 members, but if you're not paying their medical bills, it doesn't mean anything. The second thing I want to point out is that we are ACA exempt. There are a lot of states that have implemented their own mandates. So I think there's 7 now total. It does not matter. Even in good old California, if our members are on this type of program, they will never be penalized. And you may get asked that depending on where you live. So why are we different? Why should your clients enroll, but also why should you join our team? A couple of things I want to point out. We already talked about that we are 50% less. Real quick, when it comes to pricing, we were the first healthcare sharing ministry to move to state-based rates. Gosh, it's been a year and a half already, almost to 2 years since we did that. When you are providing a quote, it literally takes less than 30 seconds, and you need 3 pieces of information. What state do they live in, the age of the oldest member, and how many people are enrolling, because we do individuals, families, single parents, you name it. We even do small businesses, and we'll talk about that later as well. We do come with next day active dates. Guys, this means you could enroll someone today and they can literally wake up and go to the doctor tomorrow should they be sick or injured. The membership automatically renews each year. Not only is that easy for the member, but you as well, because you don't have to chase them down. Members can choose any doctor and facility nationwide, and we're going to dive into that in a little more detail. And this is my favorite stat to share with you. 93% of clean sharing requests are paid within 30 days. And we're talking medical bills, right? Again, 93% of the bills we receive are paid within 30 days. Now, clean means there's no pre-existing condition review needed or involved. So should there be, and that's really dependent on what the doctor codes it as and puts in the notes, then that, of course, can take longer because we have to request the medical records. So those can be anywhere from 60 to 90 days. Now, for you, the agent, the best part. You can enjoy the benefits of a lifetime residual income. You know, our commissions are very, very competitive. And year 2 is where it really turns into a nice residual income. It is level commission for life of the program. There's no drop-offs. There's no chargebacks, you name it. You can sell nationwide with just your resident license. And yes, we are available literally year-round. We accept health, life, and P&C licenses. So for example, I'm in Texas. If I'm licensed here, I'm good to sell nationwide, excluding in the bottom left-hand corner, the residents of Massachusetts, Pennsylvania, Washington, Montana, New Mexico, Vermont, and Maryland. If members in other states travel there, it's totally fine to get care there. We can't enroll the residents there. To be honest, they're just not friendly with healthcare sharing ministries. We have a lot of approved marketing materials, including a marketing kit that has ads for your social media, email campaign templates, logos for your website, anything you can think of. We have monthly on-demand trainings just to keep you on your toes. And the best part is this is perfect to bundle with a variety of things, but just some 3 popular ones would be accident, cancer, and hospital indemnity. And Ron's really going to dive into that. You are silly if you do not bundle this with what you're already offering. That is what has truly made our agents successful. Okay, so about a year ago, we moved to freedom of choice. A lot of people look at that as an open network, but I don't really like to use those terms because there actually is a network. It's called First Access. So how this works is on our website, if you hover over resources, you'll see freedom of choice. And if you click that on our website, OneShareHealth.com, again, OneShareHealth.com, then when you are enrolling a member, we highly encourage you to utilize our provider locator tool. It has over 1 million providers nationwide. These are licensed doctors. And 70% of the reason you go to your PCP can be handled via telemedicine, and we'll talk about that. So is the list required for members to use? No, they can choose any doctor they want. Do we highly encourage them to use it? Yes, because the process is so simple and just for that peace of mind. So number one scenario is probably 85–90% of what you're going to see. Member looks at the tool on our website, they see their doctor listed, they pay the applicable visit fee or ISA, which ISA to you may be like a deductible, and that's it. They're not subject to a balance bill. That is why we encourage them to use that list. Easy peasy. Now, once in a while, number 2 and 3 can happen. Let's say the provider is not listed on the tool, and maybe they've been seeing the doctor for 5 years and don't want to change. Totally get it. They may be required, asked to, or voluntarily pay cash to get the best rate. We are doing a lot of education this year around cash pay. A lot of people don't know that that is the best discount out there, sometimes better than traditional insurance. So if they can, we encourage them to pay cash, keep all their receipts, and of course get reimbursed in less than 30 days. The third scenario, again, the doctor's not listed on the tool, but they submit the bill to OneShare. Well, they're always going to charge more than they should. They like to do that. And there is going to be a balance bill involved. We always tell the members, do not pay it. You send it to OneShare. We will advocate on their behalf. At the end of the day, I wish that all providers took this, but we can't force them to. So they sometimes can be a pain in the rear. And so we just really handle it a case-by-case basis, but we are always there the moment the member has a situation. And finally, number 4, facilities are not on that tool. Facilities do not matter because they can go absolutely anywhere. And I love the way 4 functions because we do all the work for the member. We speak directly to the facility, directly to, the surgeon or whoever is doing the procedure or process, because there typically is one involved. And we do need to know about any procedures 10 days prior to, because there might be pre-notification involved. So for facilities, we do all the work for them. Okay, when enrolling a member, there are 2 knockout questions, just 2. The first is statement of beliefs, which, by the way, all healthcare sharing ministries must have this. It's just part of our regulations and requirements. You will find that OneShare Health is more inclusive than most HCS SIMs out there. We do not ask your clients their religion, nor would we ever make them show proof. We are more open with who we allow to enroll as long as they agree to these 5 statements. You will see they're biblical in nature, but they don't have to be a Christian and they don't have to read the Bible to enroll with OneShare. This is, in summary, listen, you have one body. Take care of it and live a happy, healthy lifestyle to the best of your ability. The second disqualifying question is in regarding substance abuse. So I'm going to read the second sentence to you because it's literally off our application. In the last 12 months, keyword, last 12 months, have you or any family member enrolling used illegal drugs or tobacco in any form? This does include e-cigarettes or vaping, or abused, keyword abused, alcohol or legal drugs such as prescriptions or over-the-counter meds. If they say yes, unfortunately, they will not be able to enroll. It is an honor system. I mean, we can't prove it. The way they would be caught is if down the road a medical bill is submitted and the doctor codes it due to that usage or abuse. Now, this question is a little bit twofold, or I should say knockout question, because at the bottom it says prior to the last 12 months. So for example, if they say hey, I quit smoking 3 years ago. Great, they can enroll with OneShare, but again, any condition the doctor codes as related to that usage would not be eligible for sharing. So it really depends, was it in the past 12 months or prior to? All right, so before we jump into our programs, we do use different terminology, and that's for all healthcare sharing ministries. It just depends on the HCSM what terms they choose to use. However, the really good news is the definitions are exactly the same. So I always tell agents, just print this slide off. It's also on our website, and just have it next to your phone. So when you do have an opportunity to present this to a prospect, you're using the right terms. It is really important that we stay compliant. We are very ethical and we do things by the book at OneShare, but also in order not to confuse the member, right? We're telling them it's not insurance, so we got to make sure not to use insurance terms. Here's the most popular ones you're going to come across. Deductible, instead of that, we call it an individual sharing amount. We shorten it to ISA. Instead of copay, visit fee. Instead of premium, monthly contribution. This one's a big year, This one's a big one. We do not do calendar year, we do program year. So depending on when they enroll, it could be July to July, December to December. And instead of covered, we say eligible for sharing, and benefits, we say sharing services. All right, take a quick drink here. All right, so we offer 2 different programs. We have the classic program, which is the most popular, honestly, probably 90% of what you'll sell. And then we have the catastrophic, which is the most affordable. At the top, you'll see 3 tiers: basic, enhanced, and crown. It is your job as the agent to help them choose the best tier. And I can assure you there are questions we will train you to ask to determine that. In fact, there's 3 questions that are very important to ask that are not on here, and I do encourage you to write those down. So just follow the tiers down and all the services, well, not all of them, but the most popular ones are on the left. Anytime you see programs in regards to OneShare, you will always see telemedicine listed first because it's free and it is available 24/7 from day one, 365 days a year. Guys, they are speaking to an actual licensed physician that can call in a medication if applicable. So that is the first line of defense for our members. Preventive services. We have been told by many members we have the most comprehensive preventive services out there for HCSMs because we have colonoscopies and mammograms and immunizations and pap smears and physicals and stool tests, fecal tests, all of that. It is 100% shared up to $1,000 per member per program year. So I'm a family of 4. We each get $1,000 every single program year it starts over. Now, this is the only sharing service that has that 180-day waiting period, which is 6 months. So if someone's switching over from traditional, we tell them try to get your mammogram and colonoscopy out of the way as soon as possible. If the doctor is telling them, Michelle, you cannot wait, I want you to get this done immediately, chances are that's not preventive. It would be diagnostic, which we handle different anyway. Okay, so here we go. The first question you want to ask every member is, how often do you go to the doctor per year? If they say, oh my goodness, we're there all the time, well, then you're looking at that classic crown tier on the far right. It's the most comprehensive, highest tier end we have. If they're kind of like our family, knock on wood, and say, you know, we really don't, we just go for our annual checkup, well, then there's lots of other options. Depending on the tier, 1, 3, or 5 visits per program year, $40. Anytime you see a visit fee listed, anything done during that visit falls under the visit fee. And one thing I want to point out on both of our program charts, everything's per member, not per family. The second question that's very important to ask each prospect is, do you currently see a specialist? If they say yes, you can see it's only available on that crown tier. And if they say no, you have other options. Now, this one, you need to dig a little deeper if they say yes, because chances are there could be a pre-existing condition involved. Pre-existing conditions have a 24-month look back and a 24-month waiting period. Ron and I will be the first to tell you we are looking for a healthier type of individual. If you are speaking to someone who's chronically ill and constantly in the doctor's office, this is not the right program for them, and that is okay. We want to do what's best for them. You will notice specialist does not require a referral, and it's on limited visits. So I always tell people anything that ends in ologist is typically a specialist. Okay, urgent care, depending on the tier, 1 or 2 visits per program year, per member, $75. ER is one of our biggest selling features. I don't know if ever I've seen a bill below $1,000 for ER, let alone $500, but that is the visit fee a member pays. Now, 2 rules about ER. If the bill exceeds $10,000, the member will be required to pay their ISA, but the visit fee feeds into that, okay? And the second thing is, if you do not go home and the doctor ends up admitting you into the hospital, then we go down to hospitalization. And of course, they would have to pay their ISA anyway, and the visit fee does apply to that. But hopefully they go home same day, and that's a very affordable bill. Okay, now we're going to jump down below. Everything above was visit fees, and now we're going to really focus on that individual sharing amount, which we said is like a deductible in insurance world. Now it is individual, which means per member. And at time of service, no matter what tier they choose, they have to choose which one do they want? 5,000, 7,500, or 10,000. Of course, higher the ISA, lower the monthly contribution amount. Now, x-rays, labs, and diagnostics really can go up above or down below. So if you are at the urgent care and they do blood work or an x-ray, if it's done right there, it falls under the visit fee. It's when they refer you out to a different facility, doctor, appointment date, etc., then the ISA applies. Surgery, hospitalization are 100% eligible after the ISA has been met, up to, keyword, the maximum limit per incident, which you'll see down below. Now, I want to do just a very quick example with you. ISA, okay? Think of that almost like the max out of pocket in majority of the situations. So let's say you have a member in a horrific car accident. They're there 4 days. The bill is $150,000 and they're on, well, really any of these tiers. So they would pay their ISA, let's say it's $5,000, and then OneShare would pay the remaining $145,000 because it did not exceed the maximum limit per incident. And then should in that program year, they get in a completely separate accident or injury, or they get COVID, their ISA has already been met for the program year as long as it's the same individual or member. Okay, maternity. This is the third and final very important question you must ask all members. And it's twofold. We have to know right now, are they expecting? And I'll explain how very important that is. If they say no, the second part of it is, are you trying as a family within the next year? If they are, again, only the Classic Crown is available. 2 rules when it comes to maternity. The baby must be conceived after active date. I literally just this week had an agent reach out, so excited because he has a prospect. It's going to be his first enrollment, right? And she's pregnant. Now, would we deny her from enrolling? Absolutely not. But would that pregnancy be eligible for sharing? No. And I would guess that is just not the right thing to do to the mother, right? So at the end of the day, it's her decision, but we have to educate them on these type of things. If I enroll today and get pregnant next week, that's completely fine because there is no waiting period for maternity. If the baby comes early, that's okay. Once the member pays the ISA, then it's up to $5,000 for natural, $8,000 for C-section, and $50,000 for complications. And then the baby must be added to the program within 31 days. Okay, wrapping up, maximum limit per incident depends on the tier, and that feeds into the lifetime sharing maximum, which is $1 million per member, not per family. $1 million per member. Okay, we're going to very quickly go through the catastrophic. I will tell you there is a niche in the marketplace for this. It doesn't get as much attention, of course, as the classic, but With OneShare Health, young adults can stay on with their parents till they turn 27. They get an extra year. And when they age off, they're young, they're broke, they think they're invincible, and this is such a good program for them. So I really want you to keep the Catastrophic in mind for aging off their parents program, maybe newlyweds that are young and not starting a family yet, or my mom is a perfect example. My dad got on Medicare 2 years before she did. And she was like, what am I going to do for 2 years? I'm going to pay an arm and a leg. Well, she went on the Catastrophic program and saved literally thousands of dollars. Now, this one is the most affordable because it does not have preventive, PCP, urgent care, or maternity. But what do you notice at the top? Telemedicine. Huge selling point, because a member may say, I can't afford anything else, but what if I need to go to the doctor? Well, you can, $0. Now, specialist has to be due to hospitalization or outpatient surgery on this program. Heart, stroke, heart attack, any of those, cardiac arrest. Emergency room, same rules as before, $500 visit fee, unless the bill exceeds 10 grand or you're hospitalized. At time of enrollment, they choose their ISA. 2 options on this program, 5 and 10,000. Higher the ISA, lower the monthly payment. The next 3 are all 100% eligible after the ISA has been paid, and it's always important as an agent you say up to the maximum limit per incident. Now, on the Classic program, we have the tiers called Basic, Enhanced, and Crown. On this one, the tiers are 150, 250, or 500,000. So the member does have to choose that when enrolling, and whichever one they choose, the lifetime sharing maximum is automatically double the amount. So go straight down, 300, 500, or $1 million per member. Now, real quick before Ron takes over, I want to point out to you one thing that's not on here. Both of our programs come with a membership discount program. You will get asked, well, what about vision and dental and prescriptions? And there's a lot more, but those are the 3 most popular. Those are all included at no additional cost, and it's a one-stop shop. So regardless of what program they're enrolling in, they automatically get enrolled in the membership discount program as well. So even the Catastrophic has vision, dental, and prescription. All right, Ron. Well, I went through all the program details. You are the expert at bundling, so take us away.
All right. So my name is Ron Harrison. I, like Michelle said, I've kind of been here since the beginning in a couple of different capacities. So I started my career about 12 years ago in healthcare and sales, never selling a thing in my life and not even really knowing how to sell insurance. Actually was the manager for the company who sold the very first OneShare program, and then moved over to OneShare thereafter after I saw the value that it offered in the industry, especially with what's going on and all of the regulations and short term can only be 3 months and then it can be 6 months and all the different things that happen. So 2010 March, the Affordable Care Act was signed. It went into, I guess you would say, effect January 1st, 2014. So I started a couple of years before that happened. And I sold, United Healthcare. I sold short term. I sold fixed indemnity, everything. When I was promoted to a manager, I did a lot of the sales training. And my job, part of it was I convinced our reps to not only not sell faith-based sharing ministries, but how to sell against them. And throughout the years, really became, enamored with what the faith-based sharing ministries are doing and how much they remind me of what I sold in 2011, 2012, 2013, before everything was short-term and Obamacare, right? So outside of the open enrollment period, we actually have brokerages who sell up to 70% faith-based sharing ministries, and a big portion of that is who we are. Why is that the case? Well, obviously during open enrollment, a lot of people are qualifying for subsidies. However, Michelle did mention this, we could be up to 50% less than those who don't qualify for subsidies. So during the open enrollment period, someone calls in, their rates are going up, they don't get a subsidy. We are a fantastic option for them. But outside of that open enrollment period, right, when options are a lot more limited, you have, and we're going to go over short term, we're going to go fixed indemnity and how we stack up against that. But here's what we offer. Doctor's office visits, emergency room visits, hospitalization, preventive, maternity, right? You're on the phone and you're talking to somebody, and what are you looking for in healthcare? Well, they want to go see the doctor if they get sick, if they go to the emergency room, if they need a hospitalization, God forbid they get cancer, something like that, especially whenever you have either young children. I'm starting to, I just turned 36, so I'm starting to get to the age where and Michelle said, the youngsters are invincible. I used to think that, but now I go in for my preventive care because I'm like, oh, that doesn't feel right. And so, you have the demographic who do go their preventive services every year. And then obviously maternity being a big one. Probably a lot of us who sold prior to the Affordable Care Act remember whenever maternity wasn't even an option on major medical insurance. So it's one of those things that we offer what people are looking for. Okay, especially compared to others in our space in this healthcare sharing ministries. We offer a lot of first dollar benefits, as you can see, that most don't. So I want to talk a little bit about short term first. So obviously we know how short-term works. It's probably one of the most sold insurance products outside of the open enrollment period. Why is that? Because it's very simple to sell. It lasts for 3, 6, 12 months, and then expires, right? So the reason that we are who we are is we don't do that. Okay, we can last up to age 65 for the primary and their spouse, and up to age 27 for any dependent, which is actually a year longer than the Affordable Care Act. So in that area, we actually are much better because you're not chasing your tail. But the biggest reason that this is important, and I remember selling short-term and worrying about this, is let's say 4 months in to a short-term policy, somebody gets diagnosed with something like cancer, or God, it might not even be a knockout, but it could be, they get diagnosed with anything, and then that term ends, and there's no open enrollment period. So now they either, let's say it's cancer, they can't get on another short-term. So you're looking at a fixed indemnity that doesn't have questions, or they're left with nothing. Right, so this is where we come into play. They don't have to worry about something becoming a pre-existing condition further down the road whenever they need to look at another program. If that program expires in June, and now they have to wait 7 months to get on an Affordable Care Act plan. All righty. Another big thing that is important to us here is we accept those with pre-existing conditions, minus the tobacco knockout question that Michelle went over. But short-term medicals have that extensive list of pre-existing conditions. And I probably to this day, if you asked me to remember, I could probably remember United Healthcare's to a T. I could probably remember Pivots to a T because I read it so many times. And, you get halfway into an application, maybe they didn't, tell you something that they should have told you, or they didn't realize that, when you ask them, do you have diabetes? And they say no. And then you get into the medications and they say, well, I take my metformin, but that keeps my blood sugar low, so I don't have diabetes anymore. And all of a sudden, application's off the rail. With OneShare, again, that's not an issue. Okay, so we do have a waiting period for pre-existing conditions. Most short terms, actually all short terms, don't take if you do have a pre-existing condition that's not a knockout, they won't ever cover it. After 24 months, we would actually allow that to be shareable just like anything else. All right, so if you have someone with some minor to mid-level pre-existing conditions and they don't mind maybe a little bit of a waiting period, we're a great option both inside of open enrollment and outside of open enrollment. So that can be huge as well. And then, guaranteed renewable up to age 65. This is something that I wish we would have had sooner when I was an agent, and that is not having to every 6 or 12 months, every 3 months in some states, depending on their restrictions, having to chase down somebody. They have to pay their initiation fee or the enrollment fee all over again. You have to ask those questions, and instead of looking for new clients, you're just trying to keep what you had before, right? So because OneShare is guaranteed renewable, because it just continues on and continues on, you're out there looking for new clients and allowing your former OneShare the clients you do sign up on OneShare to give you lifelong residuals. All right, for the life of that for the life of, we don't call it a policy, but for the life of that membership, you do earn those residuals, allowing you to build a business and not have to chase your tail just to keep the business you already earn. All right. I already talked about this a little bit here, but we have the tobacco, the substance abuse, and then the statement of beliefs. It is so much nicer not having to worry about, will someone get knocked out for something, or having to read those questions, and then all of a sudden you spent a half hour selling somebody on a great product, a short-term product, and all of a sudden they can't get on it, right? Preventive services and maternity. This is huge. Most short terms don't have preventive services, and none of them share for maternity. You talk to people all day long who are starting their own business, and they also want to start their family. You talk to someone who's 25, 35 years old in my age range, and all of my friends are having kids and starting families, and that's something that's very important. Unless they can get on a major medical, and maybe they don't have the ability to, or it's too expensive. That's again where we offer things that most don't. And then finally, we are tax exempt. So New Jersey, California, and I don't have them memorized, but I think there's five or six states now that have implemented, for the good of their citizens, a tax penalty for not having the Affordable Care Act in plans in their state. The great news is, if they're worried about that, especially for small business owners who don't want to have to pay more taxes than they already do, we are tax exempt. We can get them out of the state-based tax penalties for not having insurance. So when it comes to short term, there's obviously a niche, right? If somebody's like, hey, I have a month until I get on my Medicare, I have 2 months until I get on my Medicare, obviously that's the way to go. But for someone who's maybe 45 with a family of 4, we're going to be a much better option for someone who's looking for something to last 3, 4, 5 years. And you, as the insurance agent, the reason you do it is to make money. You're going to get those residuals because of it. All right. The next one out there, and the big one that is sold, is fixed indemnity. Okay. They have a limited payout for medical bills. Okay. So, and we've all seen the payouts from the different companies out there. They tend to be a little bit lower than what the actual cost can be. Right. So, someone goes into an ER visit. So I'm going to use the example of my dad, who, when I was younger, he had a bleeding ulcer, went into not only the ER, but he was in the intensive care for 6 days. That was over $100,000 bill, and this was in the 90s. So someone has that on a fixed indemnity. We've seen payouts, ICU is maybe 5,000 at most sometimes. So they're not getting the bills, their bills paid. Even doctor's offices can be very low compared to what the doctor's offices actually cost. So the biggest thing for us is we pay first dollar benefits, first dollar features. So an example of that is going to be doctor's offices, right? It's a $40 visit fee that they pay when they go in. Okay, that's it. They don't have to worry about getting a reimbursement from their fixed indemnity later on, because they had to submit a bill and then they get $20 back or $50 back or whatever it might be. Another one is ER, and this is probably one of the biggest, is the ER visits for us being a $500 visit fee as long as they're not admitted to the hospital or it's under 10,000, right? So that is a huge selling point. I don't know if anybody's gone into the ER lately, but I actually had to have stitches done 3 years ago. It was a little over $1,100 for that, right? With OneShare, it's a $500 visit fee, and that was just a simple stitch in my hand. It could have been obviously much worse than that. Comprehensive services, and we've gone over this again, but preventive and maternity, it's a huge selling point, as opposed to fixed indemnity that don't have those. Don't have those features. So, when you have someone, you're going through your needs analysis, and they'll say things like, yeah, I am looking for, to start a family, or yeah, my wife goes in for her annual checkup for, her annual wellness. That's a huge selling point. And the reason that that the first two are so important when it comes to us versus a fixed indemnity is that this is the kind of these are the kind of features that keep your clients happy. Right? The name of the game in insurance is that persistency rate, keeping members on the books. Fixed indemnity, short term, the one we just went over, it's impossible because they literally have an end date the minute they sign up. Fixed indemnity, although can last as long as they want, they go in for something small, they realize that it's not what they're looking for, they talk to someone else selling maybe a faith-based sharing membership, and they realize this is not what they like, and they get mad and they cancel. Nobody wants that. We want to keep people on these memberships, and that's our goal as a company, is to keep our members happy for you, so that way you can continue to earn those residuals instead of having to worry about, oh, my client didn't like this fixed indemnity, now they might not trust me, now they want to go somewhere else. Nobody wants that. All right. And then again, OneShare Health accepting pre-existing conditions with that waiting period. So I know, United had the fixed indemnity and a couple others that didn't necessarily, that had knockout questions, or would say, hey, we're not paying for any pre-existing conditions. I know most fixed indemnities say there's no waiting period, or what's the word I'm looking for, extermination period on the pre-existing conditions, and they just won't cover them at all. Whereas we will pay for them after 24 months. So that's a huge, again, selling point for people who might not be able to afford an Affordable Care Act plan. We will say, hey, you know what, it's a little bit of a wait, but after 24 months, those pre-existings you came on will be shared just like anything else. So that's where we stack up us compared to a lot of the other things you're selling in your portfolio. But again, we're here to make money. That is what, as agents, we do. We obviously have the fiduciary responsibility to our clients, but we want to make sure not only are they protected, but we're doing the best that we can with the different options that we have to sell them. So I used to teach this, and I would call it, you want to sell the Sunday, okay? Packaging us with an accident, a critical illness, hospital indemnity, that's kind of going to be the core package. We've heard it called the total protection package before. Then you have the dental, the vision. Now I know we say we have a discount. Some of your people want more than a discount. Some of your people want the full dental, the full vision, and then you have the term life insurance as well that you can add on there. So how does this work, right? You always want to sell the sundae. The sundae is the ice cream and the fudge and the crushed peanuts and the cherry on top with the whipped cream, okay? So you have your ice cream, that's going to be your OneShare Health, that's your core product. Then you're going to add the hot fudge, the accident, the critical illness, right? We're going to sell that every single time, but also we're going to quote them where we're going to bundle that with dental and a vision from company X, Y, and Z. And then maybe because they lost their job, and a lot of people, when they lose their job, they lose their life insurance. It's crazy to think that there are people that just have life insurance through their company, but a lot of people do. So what a great time if you sell life insurance, that if you're talking to someone who lost their job, the first thing I'm going to ask, did you lose your life insurance as well? Great, let's make sure that, God forbid, your family's also taken care of in the worst case scenario. So you're going to put together the Sunday. I have OneShare Health. I have accident critical illness through company XY. I have dental vision through company AB, and I have your term life through company C, D, and F. Okay, and then they might say, well, is there anything I can do to save money? Well, we can take off the term life. Do you need dental and vision, or you don't wear glasses? Well, let's take off the vision. But when you sell the whole thing first and then take off small pieces, it's much easier than trying to add accident critical illness. Now, I always say this at the end. We always make sure that we tell them that OneShare Health is different from their accident critical illness, is different than their dental and vision, because no one wants to be accused of sliding. There are regulators out there everywhere just waiting for someone to do that. You want to sell it properly and make sure that they're aware of all the different companies, but at the same point, making sure that they are fully protected, and for you, earning that money on all of these different products. So always sell the Sunday. Another thing is that when you're doing the accident and critical illness protection is to make sure that you're selling it. If they have a $5,000 ISA, not only just give them $5,000 for the critical illness, but maybe 15, 20,000, and I'll go over that in a little bit, but to help out, God forbid, not only do they need to pay their ISA, but if there's more expenses that come up because of that cancer, that heart attack, that stroke. All right. So who is our ideal member? Who are the people we're looking for? Can't afford traditional insurance. Obviously, without a subsidy, it's insane. Independent contractors, self-employed, small business owners, those who are between employment, they need help as well. Part-time employees who have a job, but they don't work enough to earn the company's benefits. Faith-based organizations, if you have people who attend churches and, for a few years, I was a youth director in when I was really young, and youth directors don't have medical insurance, and so those are great faith-based organizations and their employees, especially smaller churches, things like that. And then, like I said, those who don't qualify for subsidies. So the next piece, what I like to do is just kind of go through a pitch and exactly, how we would talk about ourselves, what we would do. If I'm talking to somebody and they call me and they can't afford their insurance through work, or they lost their job, I'm going to say, hey, I have a great product that's going to last as long as you need it. It's going to be from OneShare Health. All right. So the best part about this membership that I have for you is that it has telemedicine. So that's going to be at zero cost to you. It's available for you and your family 24/7, 365. However, if you do need to go to the doctor, it's only a $40 visit fee. From there, if you do need to go to the urgent care, that is going to be a $75 visit fee. So God forbid it happens outside of those hours where the doctor's open. And then if you do get the Classic Crown program and you need to see a specialist, again, that's only $75. So we're going to set you up today with a plan that's going to be $5,000 ISA. That's going to be your out-of-pocket for things like labs, x-rays, surgeries, hospitalization, maternity, things like that. But what I'm going to do is I'm going to bundle this together with an accident critical illness protection plan from company ABC. Okay, what that's going to do is in the event of an accident, we're going to pay your entire ISA for you, minus their small deductible of $250 or $500. In the event of a critical illness, so I'm going to use the example of cancer. My mom had cancer several years ago. It was about $280,000. Now, in this case, you would have your ISA, which is going to be $5,000, but we're going to send you a check from ABC Company. That's going to be for $25,000. What you're going to do with that, you're going to take the first $5,000, you're going to pay your ISA with it. The another $20,000 is used as you see fit. So for example, if you have to travel for treatment, maybe you have to travel an hour or two and you're not feeling well, you need to get a hotel stay for a night or something like that, or simply you're missing work and missing that paycheck, this can help supplement your income while you're going through treatment. Again, I'm going to also couple this with dental and vision from company CBD, and that is going to be, your basic dental and vision care. And like you said, you've lost your job, so you said you lost your life insurance. We're going to put $100,000 for you and your wife on here as well from company XYZ to make sure that God forbid something happens, the worst happens, at least your family will be taken care of. And that's a pitch. That is it from start to finish. It's a very easy product to sell, especially for those who are looking for a long-term solution. So
thank you so much, Ron.
That is my portion. I'll turn it back over to Michelle.
Love it, love it. All right, guys. So as Ron said, the easiest thing for you to do is to provide a quote. I always tell people, you get every single person you speak to a quote and it sells itself. I mean, it just, when they see what, there's no way. There is. Now let me show you how comprehensive the services are. You just open the door to conversation. Please let us know if you need anything, and we're just excited to be engaging with you. We're going to rock this summer. We've got some amazing contests coming out. In fact, I want to tell you real quick that the first 50 agents to write a OneShare Health application will receive $100 each. So that is a big thing. Again, the first 50 agents to submit a OneShare Health application will receive just a $100 bonus because we like you guys and we're excited for this relationship. So all right, y'all have a good day and we'll talk soon. Thank you so much.